What is going on, everybody? It is January 29th, 2023. Daily log episode over NQ. Live stream review. Of course, as I mentioned before in the live streams, if you haven't been a part of them, all of these daily logs, if you haven't caught the drift or you haven't noticed, all of these include teachings within them. And it's specific to the day and the characteristics that play out on that day. They include narrative. They teach you narrative. So if you've been following along, you're learning narrative throughout this entire process. So when I get questions on that, I hope you guys understand that these daily logs really, to me, they're huge gems. I've said it before, but um, there are a lot of the questions that you have. I answer them within these videos, and to me, it's the best to go day by day. I can't make a specific teaching on a topic. If that particular day doesn't have that teaching in there, of course, I'm not going to go over it. But if you stick with me long enough over a course of 6 months or whatever, you're going to see a recurring theme and learn certain teachings that obviously are not labeled on the title or the thumbnail. So I think they're very important. I've discussed this many times, but I just have to reiterate it for those who are newer and just came to this channel. I know I have a lot of newer viewers, so I do appreciate it. Really, really do. You guys are awesome. Let's look at the weekly time frame. So to me, going off of what I was looking at yesterday at the weekly forecast, it's probably not valid anymore in terms of what I was looking at initially for the week. So this is me just midweek, even you could do this mid-session, is just switching my bias. I'm switching to a different draw on liquidity. That's basically what switching a bias would mean, right? So the reason for that is if you guys saw the PM session, if you go over to my Twitter, I have an execution video on today's PM session because we're consolidating all morning and then coming in a PM session. I got off the charts, went to the gym, ate some lunch, and then came back for the PM session silver bullet. And I saw that we were displacing higher. So to me, that was indicating the idea that we probably wanted to drive higher. And then looking at the closure of today, we closed above Friday's candle, right? So this becomes a bearish order block or bullish order block. I'm sorry. And I'm anticipating that since we've done that, we may want to leave this portion of the fair value gap open as a breakaway gap. If we're extremely bullish in these conditions, then A, I'm not calling a top in here, which we haven't. And B, it's okay if this is left open. I understand that we're in an extremely bullish market. And if we want to continue to climb higher, then I'm okay with that idea. And especially since the supporting idea is we closed above yesterday's high. If tomorrow we don't have to, but if we retrace back into this area, then we can look for the expansion into this buy side liquidity there. As soon as we reach above that buy side, then I'm gonna have to reevaluate and see if we just drop off lower or we can continue higher. So you can see today, look at the closure. We're no longer respecting bearish PD rays, and this thing's displacing higher. So in here, I was anticipating this would become an inversion, but we didn't close underneath it quite yet, right? We just kept wicking through it. And we displaced higher in the PM session, closing above Friday's high, basically confirming to me that we're going to want to run for these relative equal highs in here. So those two highs, that's what I'm going to be looking at tomorrow going into the AM session. If these have already been ran by the time I get to the charts, then I'll have to see what price is looking like. But if I can get the meat and the potatoes tomorrow, if I can get a good move, I'm going to be done for the week. That's going to be it. I'm still going to live stream, but I'm going to be paper trading on Wednesday, Thursday, Friday. That's my idea. That's the protocol for this week per what ICT has given us. So that's what I would recommend to all the newer students is you get your meat and potatoes on an NFP week alone. You get it on Monday and Tuesday, and you have the discipline to sit out on Wednesday, Thursday, Friday. You can still sit down and paper trade, still tape read, still get your reps in, but having that discipline to just sit on the sidelines. I know it may be tempting. If you're too tempted, don't even look at the charts. Don't wake up and trade that day. Just go off and do something else. That would be my advice. Looking at the 1 hour time frame in here, you can see that we're just consolidating all morning. And it's the reason why I was not really electing to push shorts. nor did I really want to do anything. It was a really good example of just sitting still and not doing anything in those type of conditions where I was unclear on the bias. Let me restate that. I wasn't unclear. I just was unclear on if we were going to get an expansion heavily, and I was happy I didn't do anything. So overall, I was wrong on the idea of looking for lower prices. But by the time I came back to the charts, I could clearly see that, well, we're not going to run for the sell side anymore. And if you took note and were studious and you watched my execution video, what was my execution? What was it? I've talked about this on Friday on the execution. On Thursday, it's a reoccurring theme within my entry patterns. If you catch my drift and you start watching it, I'm aiming for the last 25% of a run to the draw on liquidity. Majority of the time, it's just my style. If there's something that I find higher probability, then I can get into a move where I can, squeeze a little bit more out. But I think these are so easy. They're so bread and butter. It is beautiful if you're able to see it, because what you're doing is you're waiting for a move to get almost to the draw on liquidity, and you're confident enough. This isn't always going to happen, but for the most part, with enough tools that we have in our tool shed from ICT, if it gets close to our draw on liquidity, most of the time it's going to print an entry pattern where you can get that last leg up into the draw on liquidity, take your partials, and move out of the way. It's low hanging fruit. It's extremely easy. And when you say low hanging fruit, if you were just to look at it as a tree, you're just reaching out and grabbing that little branch or that little apple, whatever's on the tree. You're just grabbing that one that's closest, nearest to you. And it's easy, and it's usually just fast, easy runs into it. And that, to me, if you're able to pick up on that style, it's so beautiful. It's such a easy style to trade with. We were residing inside of this 1 hour fair value gap in here all morning. Called it a little bit outside of lines, but that's okay. When we were coming into the AM session, I was eyeing this and seeing if this really wanted to support price going lower. Going into the PM, we closed above it. New day opening gap from Friday, utilized it to send price higher above the buy side. And we've just been attacking premium basically the rest of the PM session. So if we go down into the AM session, so it was just a sloppy delivery, and I was hesitant to do anything today. And I most definitely could have seen myself taking out a lot of losses in my younger years, because I have, and these type of conditions is basically trying to do anything. I was squirming. I was basically, trying to go long, trying to go short, getting stopped out on everything. And those are conditions where I learned a lot of lessons in pain. And I try to give that to all of you, because either you're going to learn it through pain or you're going to learn it through somebody else. And I don't wish that pain upon anybody, because it's a lot, man. Most of the time with psychology, you'll reach a point where it's not necessarily about the concepts. You see that they work, and this is a really scary place to be in. It is liberating when you get out of it, but the thought that came to my head is it's not necessarily concepts. It's will I ever be able to control myself? And that's a scary thought, man, because it's like, man, will I ever be able to control myself? Will I ever be able to just stop myself from doing these stupid things that I know I shouldn't be doing? And I think a lot of you will go through that. And I just want you to know that you can get through it, because I've experienced those same thoughts and the same worries and doubts and anxiety as you. And you just have to keep pressing. You can't have another option. You can't have another way out. You have to burn every single boat that you have and make this your number one priority. And this is for the diehards, the people that want to really be successful at this and treat this as a career and a life. You have to give it everything, but that's what it requires, because otherwise you're going to keep repeating the same mistakes, doing the same stupid things over and over and over again, and you're never going to fix yourself. The success is never guaranteed. It's up to you. You have to make that decision to stop doing these things. And that's through journaling. That's through process of elimination, of figuring out where the certain weaknesses reside within you and within your own model. You have to weed that out. And that comes through journaling. That comes through losses. So I'm catching myself. I'm going on a rant. But I mean, that's the cold, hard reality of what we're doing in here. And I only mention that because of the conditions that were presented within the AM session. So I was annotating how we were inside of consolidation on the 1 hour, and I was annotating the relative equal lows, particularly here, and how we rated out buy side liquidity, internal buy side liquidity. So from that point in time where we're at, if we were to reel it back, we're taking out internal. So from that feeling range high down to basically this low in here from the open, that's all, everything inside of that is internal. That's your external high and external low. Everything inside of that is internal. So price is taking out internal buy side liquidity, trading up into a new day previous opening gap, plus this premium SIBI. So from there, we sold off. We had bearish SMT, and what I was doing on the live stream, if you weren't there, is I was just waiting for an entry pattern, and I just particularly didn't get it. I didn't get my model. I didn't get my multiplier that I wanted. So even though I could see the draw on liquidity, even though everything came to fruition, my multiplier wasn't there. In hindsight, of course, I'm looking at it and kicking myself and saying, not really, but where I could have, my perfectionist mindset comes in. It's like, man, I could have done something different. I could have gotten in here, but I know it's all hindsight. You have to weed out that particular side of you where you get upset at yourself in hindsight versus in real time. And that's why I like live streaming, because I go back and watch myself, my actions, my basically what I'm stating and what I was doing at that time. And in here, I wouldn't have taken anything. I saw how there was a 1 minute fair value gap in here, but to me the range is a little bit too small. I wasn't extremely confident in real time that this was going to drop off lower. The only improvement I could have seen is when we displaced lower, I was reviewing today in the live stream, is this bearish order block in here. I most definitely could have shorted off of it, but it's also not my entry pattern. I don't use order blocks often in terms of entries. I use fair value gaps, and I stick to that for a particular reason, because I want my equity curve and data and statistics to be basically consistent. Because if you're using different entry patterns all the time, then you're not going to have a consistent, data and statistics. Because if I know I'm only entering off of fair value gap, then I know, well, the data behind that, I know what supports it. So the perfectionist in me, he's stating that, I could have entered off of here, and because I've seen the draw on liquidity, and I could have dropped off lower and shorted that. But in real time, I was just waiting for a displacement lower where it formed a fair value gap, and I would have been perfectly fine. If something in here formed a short, again, that would have been basically like my model, where we're 75% of the way to the draw on liquidity, just like I'll show you in the PM session. And all I'm looking for is that last 25% stretch. And that's my model. I feel confident in it. I know it repeats all the time. It's super easy. I have very little fear when I enter into those, because the move's 75% complete. And am I mad or upset that I'm not catching this full move? Not at all, because I know that's the most secure, confident entry for me. As time progresses, of course, you can always mold yourself into better entries. And of course, if conditions present themselves, then I will, I'll enter into something like up at that high in there. So hopefully it makes sense for the AM session. You can go back to the live stream and see how I was navigating all of this and basically disregarding shorting or longing, and I was electing to do nothing. So we took out the sell side I was looking for and immediately reversed from there. So by the time I got back from the gym, ate some lunch, sat down, looking at the silver bullet PM session, which is from my 1 o'clock to my 2 o'clock. And yes, I know a lot of you get bothered by me using my own time zone, but I'm not going to change it. I'm sorry. It's just what I'm accustomed to. I like it. I even saw a comment today. Somebody was like, bro, why are you turning off your live stream right before the silver bullet? And it's like, I don't know where you're at during the live streams, because obviously if you're watching it in real time, you can see I'm trading the silver bullet. But again, that's 10 a.m. Central Time. That's the end of the silver bullet. That's not the beginning of it, like New York Standard Time. Anyways, PM session. I took this on my live account, and you can see the proof of that on my Twitter. And this was a very advanced entry, if I had to be completely honest, and it may go over a lot of heads. So I'm going to keep this as simplistic as possible. Look at where we're at relative to the draw on liquidity. So the draw on liquidity is here. It's this old high, and you can see price is displacing towards it. It's heavily displacing towards that draw on liquidity. I can't make a case for price going lower. So Paired with time, I can see that we've had this energetic displacement higher, and we're nearing a draw on liquidity. So this question, how do I anticipate breakaway gaps? How do I know that's going to happen? Well, it's on a few factors. A, if you've had an energetic displacement, that's a good sign. B, if you're nearing a draw on liquidity, if you're near in proximity to a draw on liquidity, I anticipate breakaway gaps. I am anticipating that this is going to stay open because we've had the energetic displacement, and we're nearing a draw on liquidity. We're near in proximity. So it's more than likely not going to have a deep retracement. It's going to want to expand and spool towards that draw on liquidity. So in here, I was annotating how my stop loss was beneath this fair value gap. And if it dropped into it, I would have entered into it again. I would have pyramided into it because I was fairly confident in the move. But in here, you could see me enter right at this time. And I was anticipating this becoming a inversion fair value gap. So even though we didn't close above it, right here is when it becomes an inversion. Even though we didn't close above it, I'm anticipating that this is going to become a inversion fair value gap. And to me, it's not something I utilize all the time, but there was nothing else in here that I was willing to get into price. So I was utilizing that idea. I mean, you have this bullish order block there, but I'm utilizing the inversion idea. So I entered in here, we rallied higher, took out buy side liquidity there. I annotated in real time how this was the last point of interest for price, because if we dropped underneath the inversion, then we're most likely going to see this visited. So we dropped down in here and we rallied right above buy side. So that's an easy, low-hanging fruit grab type of model where you're just looking for that last 25% of this whole range or this whole move that happened. I'm just looking for that little piece. That's all you need. And I had one runner left on, and I was stopped in profit, and then price just took off and was off to the races. And I wasn't anticipating this. I didn't anticipate a huge, large run like this to end the day out. But sometimes it happens, and I'm not going to be upset at myself because I didn't anticipate that. So I'm just happy that we had a nice energetic displacement higher. It's confirming a pretty clear bias to me going into tomorrow. Annotate the new day opening gap going into tomorrow. That's resting in here from today's open. That's going to be it for today's video. Hope you guys enjoyed. Leave a comment below. Until tomorrow, good luck and good trading, everybody. Be safe.